Hi guys, it's Bullish Villa Academy here again. So in today's class, I'll be walking you through trading journal, and also we're also going to be looking at the importance of a trading journal. And I'm also going to be revealing to you the 5 major things that you need to have in your trading journal that helped me to become profitable month after month. So I want you to watch this video till the end. Alright, so without much ado, let's get started. Now, trading journal, what do you mean by trading journal? Now, for a forex trader that wants to be consistently profitable, your trading journal is something that is indispensable. Now, what do you mean by trading journal? Trading journal just means a personal logbook where you track your trades. So, if you are the type that you trade daily, or you trade 3 times in a week, or you trade 3 times, 4 times, 5 times in a month, depending on the frequency, the trading journal helps you to track your trade anytime you trade. Now, the function of the trading journal is that it helps you to evaluate your performance over time. Or one of the functions is that it helps you to evaluate your performance over time. As we all know, whatever is not measured cannot be improved upon. So, your trading journal tells you the trades you have taken, and it tells you the performance at the end of the week or at the end of the month. So now, we'll be looking at the importance of a trading journal. What are the importance of a trading journal? Why do we need to have a trading journal as a forex trader? What are the usefulness of a trading journal? So the first one is it helps to improve discipline. Now, as a forex trader, we all know that discipline is key. You have to be disciplined to follow your rules and regulations. You have to be disciplined to only take high quality trades. You have to be disciplined to stick to your risk to reward pattern. So number one is that it helps to improve discipline. Now, writing every trade forces you to stay accountable to your trading plan. You avoid random or emotional trades. So when you have a trading journal where you know that you will have to account for the trade you've taken, you don't just want to jump into any trade. So you are very disciplined to only take the trade that comes probably to your point of interest or your entry. So that is one. Then number 2 is that the trading journal helps to sharpen your risk management. Now, journaling shows if you are risking too much per trade, or if you are also ignoring your stop loss rules. Now, we all know that when it comes to forex, risk management will keep you in the game. Now, your strategy can be top notch, but when your risk management is nothing to write home about, you keep losing trades year in, year out. So once you have your strategy in place, another thing that can make you to be able to have a sustainable trading system is your risk management. So now, and the journaling of the trade will now help you to sharpen your risk management. Now, when you journal your trade, it will tell whether or not you are following your risk management. That's number 1. Number 2 is that it will also tell whether or not you are risking more or you are risking less. And then number 3 is that it will also tell whether you are also ignoring probably your stop loss, because there are some traders that they keep shifting their stop loss, or they keep moving their stop loss. And I don't know why traders are still doing that. As a professional trader, or a professional trader to be, depending on the stage where you are, once you have your stop loss, probably you've told yourself that you don't want to risk more than 20 pips on any trade, no matter the capital. Once it has gotten to 20 pips and it has taken you out, you are done for the day. So if it has gotten to 15 pips, you don't start moving the stop loss. Because what do you mean by stop loss? Stop loss means stop my losses. You understand? So the stop loss will help you to stop your losses. It's helping you to cut your losses short, so that you can have more money to come back the next day to come and trade. Now, the third point, or the third importance of a trading journal, is that it also helps to track your emotional triggers. By noting your mindset before, during, and after trade, you will see when emotions, in terms of your fear, whether your greed or revenge trading, influences your results. So when you have a trading journal, it helps you track the emotional triggers. Okay, why are you trading? Why are you taking this trade? Why did you enter this trade? Are you trying to revenge trading? Were you scared when you entered the trade? Or were you so certain of the setup that you knew that this was going to be a winning trade? So your trading journal will also help you to track your emotional triggers. Then the fourth point says that it helps you turn your mistakes into lessons. Now in Forex, you also make mistakes. Now losing trades become valuable when analyzed. Now instead of just moving on, you can learn and avoid repeating them. So one of the things the trading journal will do for you is that at the end of the week, when you're analyzing or when you're checking the trading journal, there are some of your mistakes that you've made that will now become a lesson that you don't want to repeat anymore. So losing trade now becomes valuable when you now analyze them and you don't want to repeat them. And that's because you have a trading journal when you are journalize those trades. Then the fifth point says that it helps to build consistency. Now, success in trading comes from repeating what works. Like they'll say, whatever works, keep doing it again and again. So whatever strategy you have in Forex that is working, keep using that strategy. So there's no need going to look for a new strategy somewhere else. Now, a journal helps you refine and stick to a proven strategy. So a journal helps you to build consistency. Like I read earlier, success in trading comes from repeating what works. So whenever you know that this is the strategy you are using and you are journalizing it down, so whenever you see such pattern, you take your trade. Why? Because it has now helped you build with consistency, because you are now sure that okay, this is a proven strategy that you can actually rely on, and that is because you have been journalizing your trades. Then the sixth point, it helps you to measure your growth over time. Like I said earlier on, whatever is not measured cannot be improved upon. And what the trading journal will help you to do is that it will help you to measure your growth over time. How did you fare last month? How did you fare last 2 months? How are you faring currently? So it's trying to help you to measure your growth so that you know where you are, you know where you need to work on. And even if you are doing good, you want to get better. We have good, we have better, and the best. So there are times you leave the good for the better, and there are times you also leave the better for the best. So looking back after weeks or months, you will see how far you've come. And this will help to motivate you and also keep you focused. So that is an important nugget of what the trading journal. Now we are going to be looking at what are you expected to record in your trading journal. Now what you are expected to record, we have different things you're expected to record. And now at this stage, this is subjective because it depends on the trader. But I have some points here that I'm going to be reading out. Number one is the date of the trade. Number two is the time when you took the trade. You also have the currency pair on the assets. You want to know what currency pair or the assets you traded. You also want to know the entry and the exit price, the opening price and your closing price. You also want to know your stop loss and take profit levels. You want to know your position size. You want to know the reason why you took the trade. You also want to know the outcome at the end of the trade. Did you make money or you lost money? And was it a winning trade or it was a losing trade? And also your emotional states before, during, and after. Emotional state before, during, and after the trade. So these are some of the things that traders record in their trading journal. Like I said earlier on, what you record in your trading journal is subjective. Now there is no rigid rule, there is no rigid standard. So whatever you are recording in your trading journal is subjective and is personal. Now I'm going to be sharing my trading journal with you, and I'm going to be showing you the 5 important things that you need to have in your trading journal. Now you can decide to have 10, 15 stuffs in your trading journal. Like I said, it's subjective and it's personal. But for me, I'm going to be revealing to you the 5 important things that you need to have in your trading journal. Alright, so the first thing I have here, I have the date, as you can see. So I have the dates here. Let me increase the size a bit, please. Alright. So I have, this is for August. This is for June, July. And then this is for August. We are currently in September. So let's look at August. So the first thing I have here, the heading, we have the dates. Now this were the trades I took and the dates I took those trades for the month of August. So I took a total of 14 trades in the month of August. Now these are the currency pair or the assets. Can you see? So I trade major pairs. So you can see Euro USD, Euro JPY, USD CHF. So but majorly I've been trading Euro USD for some time now. Although I have like 6 or 7 currency pair in my watch list. So now we have the dates. I have my pair, the currency pair I traded. Then the third thing I have is my results. Was it a losing trade? Was it a winning trade that gave me profit, or did I break even? You can see loss, break even, profit, break even, loss, profit. So I have my results. No, was it a loss or a win? Was it profit or loss? Then I have my how, that is the risk to reward. The risk to reward ratio. You can see on this trade I lost to half in the 6th of August, I lost 1 hour. On the 8th, I lost 1 hour. On the 11th, I lost 1 hour. On the 13th, break even. On the 15th, I made 2 hours. On the 18th, I won, or I made 2 hours. You can see. On the 20th, I made just 1 hour. On the 21st, I lost. Okay, it was a break even. On the 25th, I lost 2 hours. On the 27th, break even. On the 28th, I lost 1 hour. And on the 29th, I made 1.5 hours. Now, at the end of the day, my total win rate was 51%, and my total loss rate was 49%. So you can see. Now, I also have the last thing here, which is the risk management. Now, this is telling me whether or not I followed my risk management. You can see the first trade I took here, it was a no. That means I didn't follow my risk management. Now, when it comes to my trading plan, I'm not supposed to risk more than 1 hour, but you can see that here I lost 2 hours. So I risked more here, and that was why I didn't follow. I had a no here. Can you see? So I didn't follow my trading plan here. Now this on the 6th, risk management was yes. Why? Because I follow my trading plan. So if I'm losing a trade, it should be 1 hour or even less than, but it shouldn't be more than. So if I have risk to reward ratio of 1.5, that means my risk management is a no. That means I didn't follow my trading plan. If I have a risk to reward ratio of 2 or 3, that means my risk management is no. But if I have a risk to reward ratio of 1, 0.5 and below, then that means my risk management is going to be yes. Why? Because I followed my trading plan. Can you see? Yes. So my risk to reward, or my risk to reward ratio most times is 1:3, and sometimes you can take 1:2. So you can see on the 4th, I didn't follow my risk to reward ratio. On the 6th, I followed it 1. On the 7th, on the 8th, 1, I followed it. On the 11th, it was followed. On the 15th, okay, I won this trade. 1:2. This one was on the 20th was 1:1. Then on the 25th, you can see I risked more than my risk to reward ratio. I'm supposed to just have 1 hour, but I had 2. So you can see that my risk management was a no. Then on the 28th, I risked just 1. So that means my risk to reward should be yes here. Yes. So I followed my risk to reward. And you see. Right, so this is the format of my trading journal, which I have been using for the past 6-7 months now. You can see that this is very simple and clear and direct. Now you might want to ask me that how did I get this my 51%, and how did I get my total loss rate of 49%? So that is very easy. What you just need to do, you just add the profits together. So let's do it together so that you can be able to understand it. So we have 2 plus 2 plus 2, that is 7 plus 1. Okay, 2 plus 1, that's 7 plus 1.5, that is 8.5. So we have 8.5, which is our total win. So our total win is 8.5. So check our total loss too. Let me check total. So our total win is 8.5, 2, 6, 7, 8.5. Then our total loss 2, 3, 4, 5, 6, 7, 8. Our total loss is 8. Our total loss is 8.0. Can you see that? So our total will now be equals to our total win plus our total loss. That is going to give us 16.5. So our total win is 8.5. Our total loss is 8.0. Our total win will be equals to 8.5 plus 8.0. That will be 16.5. So now, how did we get the total win rate and the total loss? Now the total win rate will now be equals to the total win rate will be equals to total win divided by the total. Then the total loss rate will be equals to total loss divided by total. Now for the total win, we have 8.5 divided by the total, which is 16.5. So let's do our calculation to get 8.5 divided by 16.5. So we have 8.5 divided by 16.5. So you can see we're having 0.51. That's 51%. Crazy. Although we had 51%. 51%. That's for the total win. Then we go to the total loss. So it's equals to the total loss is 8.0 divided by the total, which is 16.5. So we have 8.0 divided by 16.5. 8.0 divided by 16.5. So that is 48%. So we have 48%. And this we have 52%. So can you see? So our total win rate was 52%. Our total loss rate was 48%. You can see for the month of August, 52 and 48%. Can you see? Now we are currently in the month of September. Now if you look at my risks to reward here, it's not uniform. So that means I have been risking more. You can see. Now on the 4th of September, I lost 1 hour. And that is fine because that is my fixed hour. But on the 8th, I lost 3 hours. Can you see? On the 8th, I lost 3 hours. That means I didn't follow my trading plan. On the 9th, I lost 2 hours. I didn't follow my trading plan. On the 10th, I lost 1.5 hours. I also did not follow my trading plan. So this trading journal is already telling me that I'm over risking. Can you see? I'm over risking. I'm not following my trading plan. And you can see it is already affecting my total results. It's already affecting my total results. Can you see? So this is the importance of a trading journal. This is the importance of a trading journal. Like I said, these are the most important things you need, the 5 important things you need. Although you might not want to tweak your own and add other things according to what you feel might suit you. And so we have a lot of things you might want to add, like you have ready, the time of the trade, the entry and the exit price, your emotional state before and after. So depending on what you know is going to work for you. Alright. So that is what we are going to be having for today, and that is how far we are going to go for today. So I want to encourage you, if you have watched this video to this point, that please don't forget to subscribe and also turn on the notification button so that you only see the videos whenever I upload them. So don't forget to subscribe, don't forget to like, and also don't forget to drop your comments too. And if you have any question, you can drop it in the comment section. I'm going to be replying you. Understand? And also, if you're interested in our one-on-one mentorship, you can also drop it in the comment section, or you check our link there. So there's a Telegram link there, and a link to the X app too, and the former Twitter. So you can connect with me through that too, so that we can talk. Alright, so thank you so much for your time. And like I said, this trading journal, it is indispensable. So if you have not been using it before, I'm going to advise that you start making use of your trading journal now, so that you can begin to track your records. Alright, so that's going to be all for now, and I'm going to see you in the next one. Alright, bye bye.